Here we have the daily price chart for Tesla Incorporated, stock ticker TSLA. Here we can see that there was a tremendous amount of selling pressure during the second half of the week. And this was a selling pressure that was relatively broad based when we're looking at the market as a whole. This was not really something that was directed at one stock or at Tesla specifically. We really were seeing significant declines here throughout the technology space, and even in the broader indexes like the S&P 500, the Nasdaq, and the Dow, all experienced some fairly significant selling pressure, particularly during the Thursday trading session. This started to abate a little bit during the Friday trading session, but as we can see here in the Tesla chart, there was still some definite selling activity going on here. So as we can see here, this big red candle would have been the Thursday trading session, and then this following green candle would have been the Friday trading session. And although it is green, this is largely because we kind of spiked lower to begin the session. All of the selling pressure really hadn't completed itself, but then we did recover some of those gains before the close during the Friday session. So overall, this was a green candle. But as we can see, prices have moved significantly lower here, and we have broken some important Fibonacci resistance levels in the process. So we want to kind of go over what exactly occurred last week and try to get a game plan here for what really would be the best strategy for going forward with Tesla. What price levels do we expect to see? Everything along those lines. So I would like to hear some people's comments about whether or not everybody thinks that the current declines have run their course. Do we think that we could continue to start to see lows here based on this recent chart activity? Or do we think that we're going to see a broader resumption of this uptrend, which has been in place since the second half of April? If we move in on the chart a little bit, we can see that the indicator reading remains bullish. We are seeing some positive trend momentum here in the relative strength index, which is this purple line. And this follows a period of heavily overbought price action here that occurred previously. As we can see here, we're coming very close to the 90 level in the relative strength index on the daily chart, which does signify overbought trading activity that would probably need to retrace itself a bit to the downside, or at least see a period of sideways consolidation so that these indicator readings can start to roll over. As this occurred, we did see, if we kind of move in here, we can see that we have a bearish crossover in the relative strength index itself relative to its moving average. So the relative strength index is the purple line, and then the moving average of the relative strength index is the yellow line. So across below here would be a bearish signal, but at the same time, we can see that the underlying momentum here does remain positive. There is an uptrend line here overall in the relative strength index. So the real question here is whether or not this was sort of a temporary dip lower. Were prices simply trying to work off overbought trading conditions, or is there evidence here that there's a deeper decline in place? I would like to hear people's opinions on this. Do you think that this is simply occurring because prices traveled too far too quickly, or do you think it's possibly because there was much broader selling pressure seen in the market, and the technology space in particular was seeing some severe punishment, so to speak. With most of this bearish activity, most of this selling pressure directed in that area, the technology sector. One thing that we do need to note here is the fact that as this decline occurred, we did start to break through some of these key Fibonacci price zones. In particular, we can look to the red zone here, which is the 23.6% Fibonacci retracement. We can see that we broke through here on Friday, even though it was a positive trading day. So we didn't close below this level, but it is clear that this level has broken, and that means that some of this support that would be expected to develop in this area would now be removed from the market, and this does sort of leave the stock open to some further declines in coming trading sessions. Currently, what I'm thinking about for the technology sector as a whole is that we're probably likely to start seeing some divergences in share price action from company to company. In other words, I don't really think that all of the technology stocks are going to start to follow the same path here going forward. If Thursday's trading session taught us anything, it's that some stocks are likely to start declining heavily, while other stocks are able to recover quite quickly and make up most of the losses in a short period of time. So, as one example, you can look at my prior video on Meta Platforms, the Facebook parent company, which is an example of a company that has seen tremendous declines here, with share prices not really being able to recover really any of those price declines during the Friday session. This was not really true for companies like Apple, where most of the gains were recovered, or even Intel, which recovered all of its gains and then even added some to the equation there. Intel prices actually traded higher on Friday than they did on Thursday. So, we are seeing some differences here within the technology space. And I would like to hear some comments about whether or not people think that we will start to see some divergences here going forward. Will there be some winners and losers? Will there be some technology companies that fare better than others? Or do you think we'll simply just go back to the prior trend where, a rising tide lifts all boats, and a positive trading day for one tech company probably means a positive trading day for all of the other tech companies? Going forward from here, since we have lost the 23.6% Fibonacci retracement, I would start to look at the 38.2% Fibonacci retracement for a few different reasons. One would be the fact that it is an important Fibonacci level. But then, in addition to that, we do have the rising 20-day exponential moving average coming into contact with this price zone as we speak. This would be the yellow line here. So we can see a few different indicators coming into the same area. And then in addition to that, we can kind of pull back here and see that this broader downtrend line, which was working as resistance previously, now could be expected to start working as a support zone. In other words, you do start to see prices bounce off of prior downtrend lines after they're retested from the top side. So for these reasons, we could start to see a bounce if we do see some further declines, perhaps into the low 220s, possibly even 221.50, somewhere along those lines. And I say that mostly because we do have three different indicator readings here, which do suggest that prices could fall to this area and then begin a new uptrend higher. So I would like to know what people think about these trading ideas. Do you have some different levels in mind? Do you think that prices can fall further, or do you think that these recent declines have finished and run their course, and that Tesla will just continue powering higher? We can use the comments below to make some of those comment postings. Here's the current market analysis for Tesla Incorporated, stock ticker TSLA.